Warren Buffett's simple strategy that made him billions. But the funny thing is, Buffett's strategy is actually pretty simple. In fact, it's so simple that many investors ignore it because it doesn't feel exciting enough. Warren Buffett bought his first stock when he was just 11 years old. While most kids were worrying about homework, Buffett was already studying companies and figuring out how money grows. And he quickly realized something most people never understand. The stock market isn't really about stocks. It's about businesses. Most investors buy a stock hoping the price will go up tomorrow or next week. Buffett thinks very differently. Before buying a stock, he asks himself a simple question. If I had to own this entire company for the next 10 years, would I want it? If the answer is no, he walks away. That simple rule eliminates a lot of bad investments. Instead of chasing trends, Buffett looks for strong companies with reliable products, loyal customers, and steady profits. One of his most famous investments was Coca-Cola. Back in the late 1980s, many investors thought the company was boring. After all, how exciting can a soda company really be? But Buffett saw something others missed. Coca-Cola had one of the most recognizable brands in the world. Billions of people already knew it, trusted it, and were drinking it every single day. So Buffett invested billions into the company. Decades later, that investment has returned many times over. But choosing great companies is only part of Buffett's strategy. The real secret might be patience. Most investors buy and sell constantly. They panic when markets drop and get overly excited when prices rise. Buffett does the opposite. His favorite holding period is famously forever. Instead of reacting to short-term news, he focuses on the long-term growth of a company. This allows something very powerful to happen. Compounding. Compounding is when your investments earn profits, and then those profits start earning their own profits. Over time, the growth starts to accelerate like a snowball rolling downhill. Buffett once joked that the stock market is a machine designed to transfer money from impatient people to patient people. And judging by his billions, that machine has worked out pretty well for him. Another rule Buffett follows is staying within what he calls his circle of competence. That just means investing in businesses he actually understands. If a company's business model is too complicated, he simply skips it. While other investors rush into complicated trends or hyped-up technologies, Buffett sticks with companies he can easily explain. That discipline has saved him from many bad investments over the years. But perhaps Buffett's greatest advantage isn't intelligence. It's emotional control. Markets go up and down constantly. Fear and greed push many investors to make bad decisions. Buffett stays calm. When others panic, he starts looking for opportunities. In fact, some of his best investments happened during major market crashes, when great companies were temporarily selling at lower prices. Warren Buffett's strategy may not sound flashy. There are no secret formulas, no complicated algorithms, and definitely no overnight riches. But over time, his simple approach turned him into one of the wealthiest investors in history. His story proves that building wealth isn't about being lucky. It's about making smart decisions, staying patient, and letting time do the heavy lifting. And the best part? Those are principles anyone can learn.